Welcome viewers to Sensor 360 Investor Channel, where we use best practices from around the globe from companies that we invest in. Today's segment is going to focus on equities within the 360 view of the Sensor 360 platform. Quick word on the disclaimer before we get started. The channel is not providing financial advice. Please pause, read, and then continue. Okay, without much further ado, let's get on with the show. The stock analysis focuses on Apple computers. The data study was December 2nd, and the price was 148.56. Okay, let's take a look at the company and how it makes its money. So basically, the business description of Apple is it's a consumer electronic devices manufacturer, and it has quite a portfolio of products from the iPhone, iPad, watches, AirPods, TV. It also provides services in payment like Apple Pay, etc. It generates about 40% of its revenue from the USA, North America markets, and the rest of it's international. Okay, how it makes money. So the product segments are products which is the phone, and the computer, etc. The wearables like the watch, AirPods, Beats. It also has services like Apple Care, Apple Pay, Apple Card, and then digital content, which was the music, books, video games, podcasts. And there was a note in the 10K about that in terms of its active installed base, all devices were hitting all-time highs in their major product categories. Okay, so let's take a look at that industry landscape. In terms of the industry analysis, so threat of substitutes is high because there are obviously competing products out there. With that being said, the caveat is that the Apple has a very brand loyalty following, and so those folks are less likely to switch products. But if you're not in that category, then and you're price sensitive, then there are lots of different offerings. There's a lot of competition, and I'll show you the peer screen in a second. Bargaining power of customers is moderate in the sense that once you're locked in, it's difficult to kind of switch from the iPhone, iOS world to the Android world, and vice versa. People kind of lock themselves into, but it can happen. Suppliers is also moderate. There are some. Apple has a lot of power over its suppliers, can dictate the terms, but there are also some suppliers who are just one-offs, and Apple can't purchase those components anywhere else. So those suppliers definitely have a lot of bargaining power over Apple, and also all of the competition is going to the same set of suppliers for the same products to source their components. In terms of new entrants, there are some, but it's fairly low because of just the high capital structure it requires to set up in this business. And with most social media / big tech companies, government regulations are pretty high, and Apple always remains a target for regulation. And so here are some of the competitive companies. So obviously Samsung Group, Sony Group, Xiaomi, Oppo, Vivo, and Google, and they all compete with Apple at various levels with different products. So the key thing to note about the business is that it's highly competitive, so this is a pretty strong list of competitors. Aggressive pricing competition, which results in downward pressure on the margins, and also Apple is reliant on its ability to continuously innovate, coming up with new products. So far, it's managed to do that, but we'll see what happens in the future as that product line seems to be slowing down somewhat. And then in terms of Apple itself, let's have a look at the company's SWOT analysis. Again, this is from MBA. So on the strength side, innovative new products, so they've certainly had a long string of successes. It has its client and holds a lot of IP in terms of patents, etc. And then manufacturing is spread around the world, so it's not centric to one particular space. Although China is obviously their dominant supplier. And then the biggest thing that Apple has along with Google is it's almost a duopoly, because every app has to either sit on the iPhone, iStore, or on Google's Google Play. So, and then they get to charge a toll tax to anybody who wants to put their apps on there. In terms of weaknesses, as I mentioned, the component sourcing, some are single threaded, and they're totally reliant on that. Apple's business can also be somewhat seasonal as well, with Q4 being pretty dominant, and results come up in Q1. And then because 60% of Apple's business is actually international, they are subject to foreign exchange fluctuations. So a strong dollar will obviously impact Apple's revenues numbers. Threats to their business includes, obviously, they have global and regional, subject global and regional economic conditions. So a slowdown, like we saw with COVID and supply chain issues, is disruptive. And since they also, and international events where their factories are, can also disrupt them, like with the zero COVID policy in China currently. They're dependent on the manufacturing for their different components. The tariff wars with China, which they recently experienced, increases the cost and reduces the margins. Single source we mentioned, and then also Apple is subject to a lot of scrutiny and legal action from either people using putting their apps on the Apple Store, App Store, and not wanting to pay the 30% margins. In the future, in terms of maintaining the future product line, Apple's been touted as looking at autonomous cars. Not sure exactly where that lies, but they're probably much further ahead of the virtual reality. And with their massive war chests, acquisitions would give them an opportunity to spread their business models. Okay, let's have a quick look at governance. So Tim Cook is the CEO. He's been there since Steve Jobs passed away, and his background is MBA, plus he was an industrial engineer for the most part. He joined Apple back in '98 from following a conversation with Steve Jobs, who wanted him to join. And so he's been at the helm since, doubled the revenues since his tenure started. Okay, here's a list of the key executives you can take a look at further and their respective salaries. So some of them are published, but pretty. So the thing to look at is, question here is, are they adequately paid, overpaid, or underpaid? And okay, let's look at how good a job the management's actually doing. So the pre-tax profit percentage margins, 27.4%. They've been up over a 5-year period, but notably, if you look at trailing 12 months, they've been coming down, and they're coming off high comps with the COVID expansion. ROE shows high, but that's because debt is rising, and that pushes the calculation up. And here's debt is going up, so that needs to be looked at. I mean, Apple has strong financial clean balance sheet, but it's never good to see rising debt unless they took on a lot of debt because at low interest rates. So again, that needs further investigation. And they do have an active share buyback program. They bought back 160 million shares over the last 12 months. And then down here, I've listed the capital structure. I won't go into. You can pause the video and take a look at that. Okay, historically, so the 5-year averages on revenue says 12%. Trends being up, but again, it's kind of slowing down. Earnings up 23% over 5 years. Trend is up, but more recently, it's getting mixed reports now from the analysts. I didn't put the cash in, but we know that they have a massive cash war chest. And then in terms of price and earnings per share, we can see there's been a flattening of earnings. So, and with that flattening of earnings, prices kind of come in. It's held up pretty good in the correction, and then some point in 2023, Apple should see a resumption of some growth back in their earnings. Okay, if we just look at price performance over the past 5 years and trailing 5 years, we can see, had you been invested in Apple just over the full calendar years, your return would have been annualized at 43.67%. And if we look at the trailing, because Apple has come down off its peak, and just go back 5 years on a trailing basis, then your return's 24.19, which is at least double the S&P 500. So being an Apple investor over the past 5 years paid off dividends. And let's have a quick look at the health check. I'll just bring them all up. So financials, because the margins are under pressure right now and the debt's going up, it's operational supply chain issues here. Can't give it green for now. Earnings are under pressure because margins are under pressure, and governance has to this lack of decision around what they're going to do with their money that they have, and what are the upcoming future products. So that's the question mark. So where is this company going next? Sentimental, this is very strong. Everybody is still married to Apple. The analyst community is very bullish on Apple. And technicals, obviously, they're off their peaks, so and they're not currently in growth mode in terms of price performance. So that's a red for now. So some further research needed here. So in terms of projected price performance, so we can see that on the bullish side, in terms of the argument for Apple, the wearables and services have been moving up in terms of driving top line growth, and they do have a strong moat in 900 million paid subscribers. App developers continue to build out the apps. Apple Pay has been pushing out to new markets, entering stadiums and new areas where Apple Pay can be used. And then there is some interest in autonomous cars. We don't know exactly how far they are with that. Virtual reality they're working on in terms of, and then they have a strong balance sheet and definitely very strong cash flows. Okay, and the case against Apple is they're over dependent on one product, the iPhone, and their sales were soft. The Chinese market is hampering their ability to get the products out. Then all the issues going on at Foxconn factory. They have a lot of competition. And regulation in Europe is increasing because Europe wants Apple and Google to open up their OSs. And there's always multiple lawsuits around Apple. But the biggest thing to note is that overall the growth is slowing. Okay, so in terms of revenue, current year looking at 405 billion. Next year we're looking at 428, so it's up, but growth is slowing. And then earnings per share projected for this year 625. Then next year slight increase to 681. And this community is mixed in terms of revisions. And then in terms of sentiment and recommendations, Apple actually has a very strong rating. As I noted, the sentimental picture was strong, so that's very positive. And if you just do a recommendation on the averages of buys, holds, etc., comes in at 2, which is kind of in the buyish area. And then potential targets, current year, Apple's actually trading a little bit above this already. 125 was projected, and this can be a range, doesn't have to be this precise, but next year we're looking at a range between 156 to 178, 18 months to 2 years out, but up to about 190, and then 5-year returns at 230. So with Apple trading at 148, that's getting up too close to a double there. And then different valuation models, all the different valuations. And so the DCF fair value came in at 148, which is exactly where Apple's trading at currently. So it's fairly priced in terms of the current cash flows. And then before we move on, so question to ask here is, at this level, is Apple a falling knife, or is it a star trading, offering a price at value to the buyer? So leave a comment. What's your opinion? Are you a buyer, holder, seller? Or put it on your watch list, pass. You agree, disagree? Well, let me know. And then if Apple makes the SGSG portfolio, which is the stable growth stock portfolio, if any of these stocks, if it makes that portfolio, then there'll be some additional information posted to that spreadsheet. And then, so that concludes the review on Apple. It's the key takeaways really are watch the growth and watch its upcoming product lines. And Apple is obviously a strong company. It's got a strong following. It's got a large moat, lots of cash, and it certainly has been a winning holding of over the past 5 years. So that's it. Let me know what you think. Thanks for watching. Thanks for listening. And I will say goodbye. See you in the next video. Goodbye.